Hello and welcome to this morning's update on Friday. Just today, I'm going to talk a little bit about the importance of intraday supports and resistances connected with historical signals, because there was quite a lot going on yesterday to highlight the importance of it. First thing we're looking at is T-bonds. Talked about the fact that we'd had historical sells on bonds, of different types of bonds across the world. But T-bonds is the one we're most interested in, and the thing that I said was we needed to actually make a daily close below the final intraday support of 152.30, and as we talked yesterday, it held that level. We actually got a really vicious counter trend short squeeze that nearly went to the perfect place to sell it, back at 154.02, and then overnight we've gone back down. The ability to connect between markets is also critical, and it's very difficult, impossible actually, to teach experience. And one of the things that was happening here was we suddenly got a break in the European equity markets, which fed through into the morning session long before America woke up, where we collapsed in the S&P E-mini and we went directly to the final intraday support. We went one tick below it, so we hit that level, held it perfectly, and that allowed everything to go back the other way again. As it's turned out, we're in earnings season, stocks get pumped continuously in the media, so moves to major support points are always good places to get involved. These levels can maintain their importance for a considerable amount of time. We've talked about 118.61 on the euro consistently over the last week or so, possibly even longer. We went back there again twice yesterday, failed there again, but then we've gone to the nearest support point overnight at 118.05. It's also important when we have condensed areas. This is the New Zealand dollar, which was very condensed coming into yesterday morning. We took out the final support, which I talked about first thing yesterday, and there was no short-term support, and price has continued to collapse. This is where we come back to that connection with historical to intraday. So we had a time continuation sell, which is the black square. It was lower than the previous one, so the trend is already down. And once we broke that intraday support, there was no historical support either, and the target is 68.62. So this connection between intraday and historical is what allows people to get their timing points, get exact levels for involvement. This connection also married in with gold, as it often does, as it's all connected with the dollar. As the stock market fell, gold rallied. Where did it go to? Well, it stopped just short of the final short-term resistance point at 1293.2. I think the high was 92.9, so 3 ticks, and now we've retreated back the other way overnight. But just finally, one of the other main markets we look at is crude. We have the stats through the week, towards the middle and the end of the week. Price retreated from its final resistance 52.60 when the stats came out on Wednesday, and we collapsed yesterday with the stock market. Note that we never closed below that spike low. So we did pop below it, but we sort of never actually managed to close below it, and now we're just hanging in there. So now we have a firm reference point of 51.28 for the close today. Okay, we'll leave it at that.